8:37, Pete, I've got the beat. Being joined right now by Ben Brown, the Executive Vice President, Director of Client Experience Innovation at Community Bank. How are you today?
Pete, I'm doing well, and it's feeling like spring out there. Aren't we getting close?
I'm telling you. I saw next Monday it's going to be like 72.
You know, I was checking this today because it's that time of year. It's like, are we going to make it? Are we going back to the cold? What are we going to do? So I did check it out. We're 3 weeks away officially from the start of spring. So
about that,
I'm feeling pretty good about it. I'm saying we just go for it.
Get through the next 2 days here.
Yep, break out the shorts, get the short sleeves. Let's just all join together and say it's going to happen.
I was just thinking I'm ready for a cruise anyway.
That's right.
So I'm just ready. I really am.
It is that time.
Now, the last time you were here,
Yeah.
I remember you were kind of springing little hints and surprises about everything that was going on.
Yeah.
The website name change, basically.
Yeah.
And then all the different things that were going on at Community Bank. So let's fill in the missing blanks here.
Well, I tell you what, it's we're in 2024 now, and back in 2001, we purchased CommunityBank.tv. So we had it all the way from 2001 all the way until February 7th, 2024, and I can now announce officially it is retired. So we had a retirement celebration. We had a nice party. We gave it a couple tickets to the shows, a weekend getaway, and nice glass vase. So .tv is now retired, and we are now CB.bank. BANK.
That is easy to remember. CB.bank.
Absolutely.
I like that.
So the website is now live. Everything is there, easy to find. It's got a great search function at the top where you can search for something if you can find it. But online banking login is still there. All that is the same as well. So real easy. But really what we're excited about is we now have the foundation to grow. So we've got a number of new initiatives we want to incorporate into the website. So now we've kind of got the base built for it. And so over the next couple of months, as we continue talking, we'll learn about some new stuff that we're putting on the website and kind of making it even more functional for you and even better. So that's been pretty cool, CB.bank. But then, we decided, hey, why don't we change all of our email addresses too? Because that's always fun, right?
Oh my gosh!
So across the whole bank, we changed everybody's email addresses to your name at CB.bank. So we're working through that right now. So if you're not getting an email from me, it's probably in your junk. Check your junk or your spam.
Doesn't recognize it. Yes.
It's interesting. I've changed email addresses before and done domain names, but it's amazing the technology out there today to catch spam, to catch junk emails and things like that versus what we even had a couple years ago. It is light years ahead. So yeah, that was a big learning curve, but all our emails are now updated. So we're glad to get that project off the ground and up and running. And then we started rolling out some new CD specials, money markets, home equities, all sorts of other stuff too. So
yeah, tell me about that. Tell me,
Yeah.
I want to go over these new CD rates.
Yeah,
let's do that.
Well, so there's a lot of talk. So what's happening with interest rates, right? So
Right.
we had that whole period of time over the last 18 months or so. We went from 24 months went from 0 to 5.5, 5.25, somewhere around there for this federal funds rate. And I'll tell you, that's something a lot of people, we don't really learn about what this federal fund rate is. What does it mean when the Federal Reserve raises rates or lower rates? So they're doing some market activities to change the rate that the banks borrow from each other every night. So every night banks borrow from each other all across America, all across the world, and from government-sponsored entities. So that rate right now is about 5.33%. That's an overnight rate.
Didn't know that.
Yeah, federal funds rate.
All right.
So what we've done two things. One, we've got a number of different CDs. So CDs are certificates of deposit. They're FDIC insured, and that's up to $250,000 per depositor per account. There's certain ways you can get more insurance depending on how you structure your account too. So that's always worth calling your banker. If you've got more than $250,000 in cash, you call the banker, talk to them. They'll figure out how you can best structure your account for that insurance.
And they could do it at any of your local banks.
Oh, absolutely.
Okay.
Yes.
Right.
All of our branch managers, our universal bankers, they're all, and they'll explain, they can take you to the FDIC website and show you how you can set it up and structure it to get the most coverage that you need. So we've set up a couple of different ones: a 6-month, a 9-month, a 12-month, an 18-month, et cetera. And the rates are kind of interesting. They're higher, 5.25% APY. That's an annual percentage yield, and that's on a 6-month. So that's
really good.
As a $2,500 minimum to open that up, and you lock it in for 6 months. Now that APY, I'll also tell you, you'll see a difference between what's the rate and what's the yield. So the rate's actually a little bit smaller than that, 5.25, but by leaving it in there for 6 months, and then you get interest credited every month, and then it compounds, you're getting interest on interest, that's where you get the higher rate, that 5.25. So when you're comparing rates out there in the market, always look for that APY, annual percentage yield, to compare kind of apples to apples.
Good to know.
So yeah, 6 months starts at 5.25. Our 9 months, now it's a little bit larger. That's a $10,000 minimum, and that's at 5.15 APY. Then we go to the 12-month. That only has a $500 minimum. That's at 4.55, and then the 18 months, same $500 minimum, 4.55 APY. So that's how you can kind of lock the money in. If you got a little savings cash, you want to set it away, lock it in for a while, decent interest rates, set it and forget it, if you will, like they used to say out there, right? So, so that's good if you don't have any immediate needs for it, right? Or if you kind of plan where you want it. But then we've got folks like myself that, I've got 3 kids and a family, and I need cash sometimes, right? I can't plan everything.
I want to go to Disney.
Yeah, you know how that works, right?
Yeah, absolutely.
So that's where the money market account comes in. So money market account is kind of like a hybrid between like a checking account. So it has you can write checks off of it, but they're limited. You can't write just unlimited checks off of it. So you get 4 per month is what they want you to do. After that, the small fee applies for each one. So the idea is you're not using it every day. It's not your everyday checking. It's more of a savings, but it gets higher interest. So right now we've got a new tiered account, and this is pretty cool. So a tiered account. So what that means, as the balance increases, the interest rate increases, right? But what we've done is we've tied that interest rate to the federal funds rate. So if the federal funds rate goes up, interest rate automatically goes up. If it goes down, it goes down. But it's a fair deal, right? So it's not just the bank or some organization saying, here's what we're going to pay you. It's saying, no, you're going to know what you get in this account. You're going to know what your interest rate is, and it's going to be a fair deal for us and a fair deal for you. And that way you can open it up. You can put your cash in there, and then you don't have to worry about it. You don't have to worry, am I getting what I should get, right? Should I? So we're really excited about that. Now that one has, for balances over $10,000 and then up to $1 million, right? We're paying 4.65% APY on that for the first year. So that's a promotional rate for the first year.
Wow, that's awesome.
And it's flexible money.
Yeah.
So it's almost like the higher rate like a CD, but at the same time, you can write checks out of it. You can transfer it to your checking account. You can spend it all. So it gives you that flexibility. So,
there's a lot to think about there. You got a lot going on.
Well, we're really trying, in this interest rate environment, especially with folks looking for the yield, because you want to get paid for your money, especially with inflation still up out there, right? You need to make some money on your money, but if you want to still keep it liquid and have access to it, how do you best do that? So we're really trying to think, and we really challenge ourselves. Hey, let's think through that. Let's figure that out. Let's bring some products and services that make sense for folks. So.
I think that's been the amazing part about meeting you. Since you've been doing these, I've learned a lot, number one, but number two, very innovative. You're coming up with ideas all the time, whether it's, through the drive-thrus, in going into the bank, and now this.
Yeah.
That's a lot of stuff going on. It really is. How do you do it?
Well, I tell you, we've got a great team, and we really are, as you know, and we've talked, we're community focused. We're here in Southwestern PA. We're a growing institution. Again, we at CB.bank, check the careers page. We're still hiring. We're bringing on new positions. We've got virtual tellers that are joining us now to handle these ITMs we've talked about. So we've got new positions there. We've got business analyst type positions we've been bringing on. So we're getting into data as well. So we're really trying to how do we stay relevant here in our communities, and how do we continue to bring economic development? How do we continue to bring business success to our areas? How can we support businesses, support our people, support our communities? And that's what we do every single day, and we enjoy it.
It's wonderful, it really is. And I don't want to let you go just yet, because I was reading some of these things that were going on. Can you explain in layman's term the difference between a home equity line of credit and a home equity loan?
Oh, absolutely. And this is a perfect one for springtime as well, because if you're like me, now that we're getting out of the house a little bit, now I'm walking around the house going, I need to paint, I need to do the fence, I need to fix this, right? The roof, is it okay? So a lot of folks turn to home equity type of loan products for home improvement, but it can be for other things. It can be for education. It can be for anything else that you need. So the loan and the line of credit. So the loan is like a standard loan. You use the equity in your house. So how much your house is worth minus whatever debt you might already have on your house, if you have any, and that would be a first mortgage. Some people, if you don't have debt on your house, then there's no mortgage. So the loan is just a fixed rate loan, point in time, for a certain period of months, and then you borrow the money. You can use it for what you want, and then you pay it back on a schedule, right, every month, and you know what that interest rate is. The line of credit, and that goes back to that flexibility like we talked about with the tiered money market.
Yeah.
So the line of credit, you get the line of credit up to a certain amount. So say it's a $50,000 line of credit, right? And then you can you can transfer that at any time into your checking account and spend it, or you can pay it back anytime you want, and that's a floating interest rate. So again, as rates go up, it'll go up, but as they come down, it'll come down. It floats with the prime rate. So the line of credit is really flexible for emergencies, right? For things that pop up that we have, the furnace needs fixed, the air conditioner went out, so things of that nature. So it's kind of good to have as a backup too, even if you don't need it. It's a small annual fee. Right now, it's about a $45 annual fee. Now, there are terms and conditions to this, subject to credit writing and underwriting and credit approval, things like that. Those are on our website, cb.bank. But that home equity line of credit really gives you flexibility. So kind of like a little insurance policy if you don't need it now. But if you do need it, it's a great, very affordable way to borrow money to do projects that you need to get
get
done.
things fixed. Yeah.
Yeah, it's spring, and now it's we'll see those hammers swinging soon.
I keep thinking when you said furnace and stuff like that, it sticks in my head that the guy comes over. They do the annual checkup, everything, and I said, hey, by the way, the whole house air conditioning. He goes, oh yeah, that's it's like 6,000 now.
Right, everything's got thousands on the end of it now. And
what the heck happened to a can of free? You don't do that anymore.
Well, and I think the one thing, living where we live, right, with a lot of our older houses, and there's some are historic and we love them, but I always know it's spring when I start hearing those hammers and saws about 6 a.m. from my neighbors.
Gotta do the repair.
The dogs start barking. I'm like, all right, here we go.
Yeah, that's for sure. That really is.
But we've got options. So come talk to the bank. Call us. If you go to cb.bank, the top right, hit locations. It'll show you all locations, hours, phone numbers, email addresses. So connect with your local banker, and we'll be glad to help.
Ben, thanks for coming in, man. Appreciate it so much.
Always.
I really do. It's a pleasure having you here. Look forward to the next learning segment for me.
We keep it easy, right?
I like it a lot. So that's cb.bank.
You got it.
Easy to do. If I can remember it, you can too, for sure. Thanks, Ben.
My pleasure.
Really appreciate it. It's 8:49. Now let's do a little River Band, 95.3 WJPA.